Good morning. We will pay attention to the ledger accounts of companies today. If we look at the information, Raytheon Limited has an authorised share capital of 3 million ordinary shares. We don't do any calculations with the authorised share capital. We will only use this information in the note. Raytheon Limited issued 500,000 ordinary shares at R1.50 each in 2001, so that's before our current year, and 400,000 at R2 each on 28 February 2012. That was also before the current year. So that will be the opening balance in our capital account. If I multiply the 500,000 with R1.750, I will get 750,000. And 400,000 times 2 will give me 800,000. So if I add the 800,000 and the 750 together, it will give me the balance that I start with in my ordinary share capital account at the beginning of the year. Then the retained income is also provided. Shareholders for dividends, so that was dividends that was declared at the end of the previous year, that was not paid and will be paid in the beginning of the current financial year. SARS income tax means that we didn't pay enough provisional tax payments the previous year, so that is the amount that's owed to SARS. Then the following information was obtained from Raytheon Limited for the year ended 28 February. Issue a cheque to SARS to pay the outstanding amount. So if we look here, the outstanding amount to SARS is 9,200. If I record this in the general journal, then it means that I will debit SARS with 9,200 to reduce the debt and to indicate that we don't owe them the money anymore, and I will credit the bank. In the general ledger, I will show that the amount owed to SARS at the beginning of the year is 9,200, and that amount was now paid, the 9,200, so the amount is not owed to SARS anymore. Okay, then we will look at the next entry. And they say, issue a cheque to the shareholders to pay the outstanding amount. If we look in our balances, the outstanding amount to shareholders is 24,000. And we are going to pay them on the 28th of March. So if I look at my journal entry, we will take the 24,000 out of the bank and we will debit shareholders for dividends with 24,000 to show that this liability decreases. In the ledger, shareholders for dividends is a liability, so it has a credit balance of 24,000, and when we pay the money, we will debit the shareholders to show that we don't owe that 24,000 anymore. So the two entries to pay SARS and to pay the shareholders for outstanding amounts at the end of the previous year will always be right at the beginning of the next financial year. Okay, on the 18th of August, issue a cheque for 94,000 as provisional tax payment. That means that the business did a small income statement in the middle of the year and determined how much profit they made in the first 6 months. Calculate the profit with 28% and decided that they must pay 94,000 to SARS for provisional payment. So the bank is credited with the 94 and the SARS account will be debited with 94,000. You will not debit the income tax account. The income tax account is only used at the end of the year when the final profit for the year was determined, and then you can only determine the actual tax expense for the year. So when you pay provisional tax payments, you debit SARS to indicate that the debt that you owe to SARS will reduce with 94,000. In the ledger, I will also show that SARS is debited with 94,000 as the money that we pay to them to reduce the debt of income tax that we've already made during the first 6 months of the year. On the profit, we have to pay the income tax for the first 6 months. So if we look at the next one, an interim dividend of 15 cents per share was declared. So first of all, I must determine how many shares did I have on the 31st of August. If we look at all the information that was given up to now, we haven't issued any additional shares yet. So that means that the shares, that dividend that we will pay on the shares will only be on shares that was issued in previous years. So if we look at the shares issued in previous years, it was the 500,000 and the 400,000 that was issued in previous years. So that gives me 900,000 rand. And they tell us that they will pay a dividend of 15 cents per share. So it means on that 900,000, we will calculate 15 cents per share. So I will take the 900,000 times 15. I will debit ordinary share dividends because this is my expense, and I show that expenses increase on the debit side. Who do we owe the money to? To the shareholders. So the shareholders is my liability, and I will show that I owe them 135,000 rand. If we look at the ledger accounts, the shareholders for dividends will be credited with 135,000 to indicate that that is the amount that we must pay to them for dividends. And we will show in our ordinary share dividend account that the expense is debited with 135,000. Then we will pay the shareholders immediately the 135,000, so the bank is credited and shareholders will be debited with the 135,000. And in the journal, I will record the payment of 135,000, and I show that my liability will decrease with 135,000. Okay, on the 1st of September, we issue 100,000 shares at R2.50. So money is received in the bank, and we show that 100,000 shares that was sold at R2.50. So 100 times R2.50 will give me 250,000 that was received in the bank, and the capital increased with 250,000. In my ledger accounts, I will show that ordinary share capital will increase with the 250,000 of the money that was received for the shares that was issued. Issued a check for 83,000 to SARS to pay for provisional tax. So that means that we pay to SARS again provisional tax at the end of the year. So we do a little income statement at the end of the year, determine what is the difference between the income and expenses, work out what is the profit, and calculate 28% on that, and we will send that figure to SARS. So it means that we issue a check again for 83,000 at the end of the financial year to pay SARS as provisional tax payment. So the bank account will be credited with 83,000. SARS will be debited because we pay our liability on the profits that we made during the last 6 months, so that we reduce the amount that we owe to SARS. And we will debit SARS with 83,000. Now remember, you cannot record provisional tax payments in the income tax account. You only use the income tax account at the end of the year when the final profit for the year was determined. Declared a final dividend of 20 cents per share. Now you must be careful and you must take into account how many shares that we have at the beginning of the year. That was that 500,000 plus the 400,000, so that already gave us 900,000. Then we issued another 100,000 during the year. So it means that when we declare the final dividend, the total number of shares issued is 1 million. So we will multiply 1 million with 20 cents to see how much dividends must be paid. And we will show that the ordinary share dividends is an expense, and expenses will increase on the debit side. Who do we owe the money to? To the shareholders. Why do we owe money to the shareholders? For the dividends that must still be paid. So the liability is credited with the 200,000. Now at the end of the year, they didn't say that we paid the dividend, so it means it is still outstanding and we still owe it to the shareholders. In the ledger, we will show that ordinary share dividends is debited and we increase the expense with 200, and shareholders is credited with 200 to show that we owe them 200,000. With the interim dividend, they said declared and paid. That means that you declared it and you recorded the entry in ordinary shares dividends on the debit side and credited shareholders for dividends. And we paid it immediately. That's why you debited shareholders for dividends. The closing inventory or final dividend at the end of the year is not paid. They only say declare this dividend. So it means that it's not paid immediately. And that amount is still outstanding and will be paid at the beginning of the next financial year. Then they give us the net profit for the year as 800,000. Now for the first time we know what is the profit for the year. So this 800,000 was calculated after all the adjustments were done for entries that were incorrect or that was omitted during the year, and any entries that the auditors want the business to do. And on that final profit, you will calculate what is the tax now for the first time. So for the first time, you can calculate the income tax for the year, and you will take the 800,000 and multiply it with 28%. So the expense for the year is 224,000. Who do you owe the money to? Your liability is 224,000. So for the first time, you will write in your income tax account, and I will debit income tax with the full 220,000 that we calculated on the final profit of 800,000. We owe this money to SARS, so I will credit SARS with 224,000 rand. And then the business decided to buy back 200,000 shares at R2.50. Now remember, if you buy back shares, first determine how much money will you pay to them, and then you must determine what is your average price so that you can calculate whether you are paying more than the average price or are you paying the average price. Okay, so we buy back 200,000 shares. So we will go and do that calculation to determine what is the value of the shares and what is the average price. If we look at the average price, We sold 500,000 at R1.50. That gave me 750,000. Then 400,000 was sold at R2. That gave me 800,000. And 100,000 was sold at R2.50, 250,000. So 1.8 million was received from the shareholders as capital. If I take the 1.8 million and I divide it by the number of issued shares, the average price is R1.80. Now you have to determine how much will you pay back to the shareholders. They said we're going to buy back 200,000 shares at R2.50, so it means the amount that you're going to pay back will be 500,000 Rand. Now, if you look at the average price, you see that the average price is R1.80. The amount that you will pay back to them will be R2.50. So you are paying more than the average price. That means some of the money will be taken out of the retained income. So I will say that the total amount that must be paid is 200,000 times R2.50. That gives me 500,000 Rand that I must pay. If I take the average price, R1.80, multiply by 200,000, it gives me 360,000. And if I deduct that, it tells me that I have to take 140,000 out of the retained income. So if I look at my accounts, I will see that the ordinary share capital account will be debited by 200,000 times R1.80, and that will give me 360,000. So my capital decreased from 1.8 million to 1.440 million. The retained income opening balance was 340,000. So that was kept back in the business from previous year's profits, and we will take 140,000 out of that retained income to pay back the shareholders for the shares that we are buying back. Then I have to do the appropriation account so that I can determine what is the profit for the year after we paid the ordinary share dividends and we paid the tax. The first entry that I will complete is I will take this 200,000, the difference between the retained income at the beginning of the year and the 140,000 that we had to take out of retained income for the buyback, and I transfer that 200,000 to my appropriation account. That means the profit that we made for the year, they told us, is 800,000. So what does this company have to distribute this year? The 800,000 profit for the current year, plus the 200,000 that was kept back in previous years. So they've got R1 million available. Then I go to my ordinary share dividends account and my income tax account, and I transfer the balances from the income tax account and the ordinary share dividends account to the appropriation account. So I will credit the ordinary share dividends with the 335,000. I will credit the income tax with 224,000 to close off those two expense accounts so that we don't have any expenses with opening balances. And I will go and debit the appropriation account with the ordinary share dividends and the income tax. If I work out the balancing figure now, I see that although we had R1 million that could be used, they spent 335,000 on ordinary share dividends, 224,000 on income tax, and they kept back in the business 441,000. That means that the retained income increased from 200,000 at the beginning of the year to 441,000 at the end of the year. So they kept back the retained income from previous years and added some more money for the current year. And in your retained income account, you will transfer from the appropriation account the 441,000 that was kept back in the business. So when we do the shares, you must pay attention to the buyback of shares. First of all, determine whether the shares are bought back at the issue price, at the average price, or at a price higher than the average price. Then with the income tax, you must remember that you can't write anything in the income tax account before the final profit for the year was calculated, and then you can only determine what is the income tax for the year. The catches with dividends is, especially with the interim dividend, you must have a look and see when was the new shares issued, so that the date is very important, that you can determine, must the new shares receive the interim dividend or mustn't they receive it. If the new shares were issued after the interim dividend, then the new shares will not get a dividend. If the new shares were issued before the interim dividend was declared, then the new shares will also receive the dividend. If we look at the note here, the authorized share capital is 3 million ordinary shares, and we will only show that in the note. We don't use that for calculations. At the beginning of the year, we already issued 900,000 shares in previous years, and the money that was received as capital in previous years was 1,550. Then we issued additional 100,000 during the current year at R2.50, so the capital increased with 250,000. Then the company decided to buy back 200,000 shares. In the capital account, you can only reduce it at the average price. So you can't put the figure in at what price they pay when they buy back the shares. You must go and look what is the average price and take the average price, multiply it with the 200,000 and show that the capital is decreased with 360,000. So the end of the year, we have 800,000 shares left over with a capital value of 1,440. If I look at my retained income account, they gave me the opening balance as 340,000. The profit that goes to retained income must be the profit after tax, because you first have to pay tax before the shareholders are entitled to any money. So I will take the profit of 800,000, subtract the 124,000 and say the profit after tax was 576. Then there was a repurchase of 100,000, and the difference between the average price and the price that's paid back to the shareholders will give me the amount that I will show that out of retained income, I take away the additional amount that was paid back more than the capital. Dividends is paid out of the profits, so you will show that the total amount that was paid out for dividends is 335. Remember that this 335 must be split up and shown how much was already paid. So the interim dividend is always the one that was already paid, because in the middle of the year, when you declare it, you have to pay it immediately. The recommended one is the final dividend. And in the majority of cases, this will not be paid by the end of the year. It will still be owed to the shareholders at the end of the year, and it will be paid early in the next financial year. And then I can calculate what is my retained income at the end of the year. So the total amount that's in retained income at the moment is 441,000. That means that the shareholders didn't receive this as dividend, the 441,000. So the issued share capital, ordinary share capital, plus the retained income together will give me my shareholders' equity, because this retained income actually belongs to the shareholders and it will be paid out to them in the future.